Hey everyone, so I wanted to make a video on how to create a case study. This video will be going up on my YouTube as well as our premium Discord. I believe this is the single most important tool you have at your disposal, aside from backtesting and forward testing in the live market, obviously. A lot of people get caught up on how do I do case studies and what's a right case study and what's a wrong case study, and really there is no right or wrong answer. The way I view a case study is take your time frames that you use for trading. So I use the 4 hour, the 15 minute for my intraday analysis, and then I use the 1 minute for entries, sometimes seconds, depending on what the entry is looking like. This particular case study, we are going to focus on this drop and what caused it and the why behind it. I don't need to catch every piece of action on this whole chart. However, we can identify a few things and as to what they are and why it happened and why it got tapped. So right off the bat, I can tell you that we have a flip zone right here. So you had a last sort of demand there. This is the supply that caused the break. Now, if you notice, this 4 hour zone here, if you really dig in, it actually never properly tapped that supply. So what we have here is a sort of inducement. So what we're going to do is just start marking all of this stuff out, and from there on, you guys can go on and create your own case studies. So that's our inducement. You have some more inducement here in this wick. One other thing it is, too, is I want to make note of is the whole inside internal range liquidity has been completely wiped. So one of the things we're going to make note of, internal range LQ wiped. And the next thing I want to make note of is the initial flip zone never got mitigated. Flip zone not mitigated. And you don't need to rewind your chart. People get so concerned that you can see what happened. That's not what a case study's for. A case study is to help train your eyes so that you can recognize them in a live market. Now what we can see here is inducement, but it's also something else too. It is external range liquidity. And anytime we run external range liquidity, there's usually quite a good pullback. So we're going to mark that. All inside here, you don't really need to mark absolutely every single thing you see, although you definitely can. The reason I say you don't need to mark everything, because as we go down into the 15 time frame, we'll be focused on kind of this leg up, and we'll be taking the relevant stuff from that side of things. Now, one of the things I want to also note that on the daily here, this is the daily high, which put in this last low, which ran this low. We had enough of a pullback to consider this a daily high. We are very bearish on the weekly, on the daily, on the 4 hour at the time. And when the 4 hour turned bullish to come up here and mitigate that, the chances of it turning the daily time frame bullish was pretty low, considering we're bearish on everything else. I'm not saying it can't happen. Chances are, even if it does happen, when this external range liquidity gets hit, we're going to see quite the pullback. Now, here it doesn't really show you what it tapped. We tapped into a breaker block. And obviously we wiped the range's liquidity. We can mark that as 4 hour supply, 4 hour supply. Yes, you could say this is the relevant breaker block. I'm going to pull this wick, and that's the most relevant area to me. You also have a clean push right through. There's inducement hovering right over it. It's a good place to liquidate. And if you notice the liquidation, we never actually closed below. This was, the entire move was just liquidation. So, yeah, we can go and pull every supply and demand in sight. That's not the point of this. Again, what you can do, though, is pull a few of the relevant ones, such as this one here. For example, this was a 4-hour supply. And the reason this one's relevant is these are the sell to buy wicks here that cause that supply to fail. So this is, again, a 4-hour flip zone. So what is likely to happen with the 4-hour flip zone? It is likely to get mitigated. Something else it does is it creates equal lows. What are the equal lows likely to do? They are likely to get run. So we can again call this a flip zone. Flip zone. This is where demand took control from supply. Most times these areas do get remitigated, and we can do this on any time frame. As we see, we have once again a supply here, and we won't pull every one of these on every time frame because I think you guys get the idea, but it is important to at least mark the flip zones. As you see, the flip zones get mitigated, and we will mark another flip zone. S2D flip, supply to demand flip. Demand took control from supply. Perfect. It gets mitigated. What is that? 1400. So timed with the New York Open. This was timed with the New York Open. The drop was likely London. Session timings play a huge part into this. Here we have another sort of flip zone. So if we just look at this, so you had a flip zone here. We don't need to mark that one. It's not really relevant. You have another flip zone here. Again, I'm not going to mark that. What I do want to mark, though, is point out all the sitting liquidity. And I know some of you guys seen these charts and they got 200 things on them. You don't need that. You don't. Find liquidity, find the inducement, find the flip zones, find the unmitigated zones, and train your eyes to see this stuff. You're not going to be able to look at 500 different things in the live market. What you are going to be able to find is the flip zones, the internal range versus external range liquidity, and ultimately when these areas get tapped, there's usually a good pullback. For example, if this low gets run, there's likely going to be a good pullback because external range liquidity gets hit. So I'm just going to call that enough for our 4-hour. The reason being is we'll get into more detail on our daily, or on our 15-minute, I should say. So we're just going to, wait, no, yeah, that's right. Copy the link. So we'll go 4H. And then we'll go 15M next. So now what I do with this chart itself is we're just going to highlight everything. So if you just highlight absolutely everything, you click on this little guy, and you do that, rename that. We'll call it 4-hour case study 1205. Perfect. So now what we can do is just disable all that. And if we want to have it reappear, it's just as simple as that. So now if we go to the 15-minute, the relevant area that we're talking about, I don't need to mark this whole zone. The important stuff is marked in the 4-hour. What I do want to mention, though, is our entry is likely somewhere in here. And why would you enter this when 15-minute is clearly bullish And the answer is quite simple, our external range liquidity, which we marked on the 4-hour. And obviously, the next thing we have here is some unmitigated zones. And you can see, so this is kind of noisy on the 15, but on the 4-hour, you can see the external range liquidity get tapped. And then they, of course, timed it perfectly with, I believe it was Powell's announcement that caused this huge drop. But the news is just an excuse to drive what was going to happen anyway. It's going to go where it was going to go. It's just going to get there faster. And what we could tell from here is external range liquidity got hit. So what I want to focus on right away is we had these equal lows. Obviously, that would have been TP2. You wouldn't have held full volume. If I'm going to be completely honest, you probably want to take partials here because these big candles are never guaranteed. But I would take small partials there, maybe partial out halfway again, and then leave the rest of it to run the equal lows. So now that we're on this side of things, we can look at all the trendline liquidity. And again, you're just identifying cause for the market to run things, or why the market should come get that. We obviously have equal lows. Now, on this side of things, this is our 4-hour flip zone with inducements sitting above it, so that's why this became a good target. Yes, 4-hour turned bullish to get there, but we are bearish on daily and weekly. And like I said, even if it does turn bullish on daily or weekly, I don't expect it to do so without any pullback when it hits external range liquidity. Anytime we hit the external range, we usually get a pretty decent pullback, and that's where these trades become okay to formulate. Now, there's a flip zone in here. It's hard to find on the 15, it's likely there on the 10, and there it is on the day, clear as day. We have this sort of last sort of supply, and we have, or last sort of demand, I should say, and this is the demand that caused it. So, or supply that caused it. Wow, I really got it mixed up there. So, now what we're going to say is 10 minutes D2S flip zone. The reason we're marking that is we're going to be focusing on this drop and seeing if it was possible to catch it. Do I recommend trading news? No, but for a case study, like I said, whether the news happened or not, this was going to happen, and it would have just happened slower had the news not driven it. Now, we also have some sort of inducement here. So you can see there's just a bunch of cash laying everywhere. You can say TP1, where you know you could partial out 30% or something. TP1, even 50, TP2. And again, anytime we hit a large pool of liquidity, we get a pullback, which is exactly what happened here. So, now looking at this, if we really wanted to get complicated, we could start pulling a bunch of zones in here and explaining why everything happened the way it did on the 15. We don't really need to worry about that. I just want to focus on this drop. This particular drop came from a higher time frame narrative, the daily and the 4 hours where this trade got framed off of. So for this particular trade, you don't need to mark out a bunch of stuff. If we were focused on a different part of the trade, then I would definitely start marking out more stuff. You know, had we been focused on this range, or had we been focused on taking longs in here, then we'd mark all that, but that's not the focus of this case study. And what you can start identifying is just the way the market's moving. External range, OQ, tapped. We'll even say wiped. When you see this kind of momentum on the 15-minute, there's no reason to close your whole position had you been in that. Those of us with funded accounts obviously wouldn't trade that on a funded account, but it's definitely a fun trade on your own cash account with reduced risk. So, momentum, notice the size of candle. Something else I want to mention up here is daily bearish order flow resumes, stops 4H bullish order flow. And you can see how the higher time frame completely stopped this out. So on the daily, this just wicked above. It failed to close, so no new structure was created. Just like when this came down, we created 15-minute bearish structure, but on the 4-hour, there was no actual candle body close. So this wick is nothing more than a liquidity grab. For it to be bearish structure, we would have the candle body close below here. So something to make note is LQ sweep, no candle body close on 4H. And yeah, we could have probably marked that on the 4-hour. Not a big deal. So now just playing in this zone, you don't need a whole lot of other information. So what we'll do is we'll just save this as our 15. Perfect. And then we'll go 1M. Now, if we just go back here, what we're going to do is, again, highlight absolutely everything. We'll go here. And we'll call this the name, and we'll call it 15M case study December 5th. And some of these charts will have more details than others, and that all just depends on which trade we're focusing on. But do not sit here and put 200 things on your chart, because you're never going to see them in the moment. Focus on what's realistic. Where are the flip zones? What's unmitigated? Is there momentum? Where's the liquidity at? Where's the inducement at? And those are your main things. And one other thing to mention too is this came into premium pricing. You could write that in if you want. It's definitely in premium pricing. Where did that go? Okay, so we're just going to turn that off. So we're going to go back to the 10-minute here, and we're just going to pull a 10-minute supply where this flip zone happened. So 10-minute supply, and we got 10-minute flip zone right here when we saw the buy wicks went. And there is likely something here on the 1 minute that'll give you a trade. I'm staring at the screen too long today. Alright, so now if we go to the 1 minute side of things, there is our 10-minute zone. And what you have here is actually equal highs, which I'm not quite, yeah, it's pretty equal. But what you do have is no reaction here when this flip zone happened on the 1 minute. So there really wasn't much of a reaction. There was a bit of candle, not enough. Even if you did end up putting an order on, these sell the buy wicks, all that would have happened is as soon as you cross this, say you took an order right here, as soon as this order crossed this, you would have gone break even, and you would have left an order on the extreme, because that's always a possibility with Euro, just the way this pair is. Alright, so with that being our flip zone, the realistic way of looking at it, and yes, this is a rather large stop for Euro. and this would have been your trade. So it's actually not that bad. Well, 5.3. It's not amazing for Euro, but it's not that bad. So wherever the 4-hour lows were, that's as far as you target. So the 4-hour lows are right there. Definitely didn't expect that to happen in a half hour. So now let's talk about this. So you have your 10M flip zone. And if I remember right, when I was looking at MT4 had a way cleaner chalk than this did. This is a bit of a not my favorite kind of a setup, but it's definitely there. Our actual initial chalk's right there, so that's why I came back to the extreme. This little doji candle thing, so that's the actual origin of the move. You don't do a full sweep, however, even though the fact that we tapped in above the one candle, that's enough for me to use that as a chalk. If it swept the high, it would be better, and I'm pretty sure this move on MT4, the wick furthest to the right did actually sweep this. So we got that. That's actually not what I was wanting to do. Let's try that again. So we have a chalk top. And you can definitely mark all this stuff on the higher time frame too. And you have a chalk bottom, which is actually right here, because that's where the actual flip happened. Okay. Whoops. No. Let's try that again. Chalk bottom. Perfect. So now we can start writing a few things like inducement. Inducement. The next thing I want to point to is the original chalk. And if we actually mark this properly, the actual chalk would be the top of this demand. We went above it and we swept below it. It's not the greatest chalk, but it's there. But like I said, I am like 99% sure on my MT4 this wick here came up higher. So always go off your broker. Yeah. Original chalk, entry on the flip zone, entry on flip zone, and you could say this is TP1. TP1, definitely take good partials there because nothing's guaranteed. I think you'd be silly to try and hold full volume because this is definitely not guaranteed, and that doesn't always happen. So we'll just actually leave that as a line. So you obviously wouldn't get 22R on this because myself, I'd probably, let's see, what is that, 7R. So say you partialed out 30-40% there, left the rest to run the 4-hour lows, which is around here. But even if altogether this turned out to be, you know, a 13R trade, that's a big trade. 4H low. And we'll pull this back. So that's 22R if you were holding full volume. You obviously wouldn't be. So say you took 40, 30, 40, 50% up here, left the rest running, you'd still be, you know, 12, 13, 14R, somewhere in there. And that is really all you have to do for these. You don't need to sit there and pull every zone in sight. It's quite easy to see what happened. The external range liquidity got tapped. Powell happened to feel the move at the exact time. And that's really all there is to it. Like I said, depending which zone you're in, you'll have a lot more information than others, depending on what trade you're setting up. This isn't really something where I'm saying you need to trade the news. This is just kind of explaining the why, what happened, what fueled it. And that is really all there is to it. So what we're going to do is copy a link for this, and I will be posting that in the Discord after. And again, I'll do the same thing with this, where we highlight everything. And I think some of my other trades and areas I picked to do this had a little more information, but like I said, you don't want to overdo these either. You want to just explain why you got in this, and that's about it. Alright, so, and we'll call that the 1M case study. We'll call it 1205. Perfect, and that's all there is to it. And we'll turn that off. And this will be in here later if I ever need to find it. Yeah, I'm gonna cut this video here, guys. I know for those of you that have seen my previous case studies, you've probably seen a little more detail on them. There usually is. We just happen to be in an area that was the extreme of external range liquidity. There wasn't really much to type but that. But yeah, I'll cut this video here, guys, and then later in the week I will drop maybe a trade recap and maybe an educational video. I know I had some questions come up from some DMs on Instagram, and maybe I'll make a video or two on it, toss them on YouTube for you guys. Anyways, I hope you guys enjoyed this, and for those of you that haven't subscribed to my YouTube, definitely do. See you guys later.